Hey, how's it going, guys? Harrison George here with the Harrison George team. And wouldn't it be nice to be able to qualify without actually providing any of your personal financial documents? Today, we're going to walk you through some really unique ways on how you can qualify for a home, whether it's a conventional conforming loan or a really creative solution like bank statement or P&L loans, DSCR loans. We're just going to kind of touch base on a bunch of different items, and you guys can feel free to reach out to us. Again, links in the description if you want to check in with some of these programs. So one of the most misconceptions associated with purchasing a home in a conventional loan is that self-employed individuals are going to need 2 years worth of tax returns. Now, in many instances, this is true, but for certain individuals in a conventional loan, you actually can potentially only use 1 year's worth of tax returns. So if in the year prior, you perhaps took advantage of most of the tax law to reduce your taxable income, keeping most of your money in your pocket, this could be a really creative solution for you to buy a home. So essentially what the guideline states is that you have to be self-employed for 5 years. And when we run something called Automated Underwriting System, or AUS, we are essentially going to be able to see whether or not we can use 1 year's worth of tax returns. This has helped hundreds of our borrowers actually be able to qualify for a home when other individuals have told them that they were not able to qualify. The next item on how an individual can qualify for a home is actually going to be a bank statement loan. Now, there's variants to this bank statement loan, but at the end of the day, what we're going to be looking at is either a 12 or 24-month business bank statements, and we're going to be looking at qualified deposits. There's a really complex calculation that we run on the back end, and we can get into that in a further video, but essentially we're able to take the bank statements and the deposits into those banks and give income to individuals. This again helps people who have written off a decent amount of income on their tax returns, and perhaps in a standard conforming loan would allow for them to not qualify for the same home. An additional way for investors to qualify is actually through a DSCR loan, or a debt service coverage ratio loan. This loan's very creative for those investors that want to put perhaps 15 or 20% down on an investment property. And the major requirement for this product is just needing to make sure that the mortgage payment on the home is less than whatever the rental income is done on the home. Now, we do something called a rental analysis on the property when we order the appraisal, and the appraiser will say, based off of comparables in the area, this property will rent out for X dollars. As long as your mortgage payment is $1 lower than that rental analysis, that is, for the most part, all we're really going to need to qualify. Again, there's some other components that come into this, like credit score and so on, but for the most part, the main bulk of this product is just making sure that the rental income is more than your mortgage payment. Also, some other information on that DSCR loan. It's possible with some increased interest rates and some other information that your mortgage payment could be higher than what your actual mortgage rental income is on the property. There's a lot of moving pieces with these products. Again, if you have a specific question, feel free to reach out to us. Another really amazing product for self-employed individuals is a profit and loss loan, which, depending on who prepares that profit and loss, or that P&L, can determine what the interest rate is going to be. But realistically, it is just another really creative way for self-employed individuals to qualify without providing this enormous sized document to their lender. One other really creative product that kind of goes along with that profit and loss loan is a 1099 loan, where individuals who are 1099 and who receive a large portion of 1099s can qualify with just their 1099 income. There's so many creative solutions for these individuals, especially the self-employed individuals, to qualify, that really it just takes the right person to help you understand how you can get into a home. There's been so many times I've talked to people that have said, everybody I've spoken to has told me I can't qualify. But when we've been able to assist them, we've been able to find really creative and unique solutions. And we don't just provide them with a solution and send them on their way, we build a game plan. We help them get into the home. Yes, it's possible that that interest rate may be slightly higher than market interest rates, but with the right game plan, we can build an understanding on how with perhaps that next set of tax returns, we can help them get into creative products like the all-in-one, or we can help them just get into a conforming loan if that product doesn't fit them. We really appreciate you guys checking out this video. Again, there's a bunch of links in the description. There's ways to get a hold of us in the description. Feel free to reach out. We'd love the opportunity to chat with you, even if it's just kind of a how to make it work or how does this work kind of solution. Feel free to reach out. We'd love to chat with you. Thank you, and we'll talk to you soon.